What's up, traders? Welcome to another video. Steven here, your honest trading coach, and in today's video, we're gonna go over a complete beginner's guide to how to open your first Forex trade. Now, if you are a complete beginner, you do not need to be opening a Forex trade right now. Learning how to trade is a very long process that is going to take you time, and I need you to take your time doing that. Do not use this information and go out there and place a trade. Instead, use this video as a tutorial, and once you're ready and you have a full trading plan developed, then you'll know exactly how to place a trade after watching this video. So what are we going to learn in this video? To start off with, I'll teach you everything you need to know to actually place a trade. Then we're going to go over the types of orders, the types of trades you can actually place in the Forex market. And the main three are market orders, limit orders, and stop orders. And after that, I'm going to teach you how to place an order and have an automatic stop and an automatic target placed. That way you can leave your computer and be confident about that trade, even if you're not sitting there watching it the entire time. So if that sounds interesting to you, and if it's something you need help with, then go ahead and click that like button for me to help out with the YouTube algorithm. Click the subscribe button down below the video to the right-hand side, and I'll see you after the intro and disclaimer to talk more about how to place your first Forex trade. All right, traders, welcome back, and let's go ahead and jump right into how to place your first Forex trade. Well, let's get the obvious stuff out of the way first. In order to place your first Forex trade, you will need to have an account, which means you'll need to have a brokerage. So your first step is to go find a brokerage that fits your needs and open an account with them. Every brokerage that you go to will have instructions on how to open an account specifically with them. So that is going to be your first step. For me personally, I do not recommend brokers for legal reasons, but I personally use Oanda. And the reason I use Oanda is because that is exactly who I started with in terms of when I started Forex trading. They've given me no reason to stop. So that's the reason that I use Oanda as my brokerage. You can find them through a quick Google search, OANDA. Not a recommendation again, it's just the broker that I personally choose to use for my Forex trading. Now, the next step after you actually open an account, and again, I'm not going to go through a tutorial on how to open an account. Every broker is going to have instructions on how to do that for you. After you do that, you will have a couple of options. You will either be able to trade from a specific platform that broker has. The broker itself will probably have a trading platform you can use. These are normally shit. Just letting you know, they normally suck really bad. So for that reason, you'll probably want to hook your brokerage up or connect your brokerage account to a third-party trading platform, such as MT4 and TradingView. The most popular three are MT4, TradingView, and NinjaTrader. Those are different third-party platforms you can connect your brokerage, your account to. For me personally, I do this through TradingView. I have a connected account through TradingView. I'm on a demo account right now because I'm going to be placing orders and I don't want to be wasting money by showing you how to place orders. But I have mine connected through TradingView. The process of doing this is going to be very similar across the board. So I'll show you how to connect a brokerage to TradingView, but it'll be very similar no matter what third-party platform you're trying to connect your brokerage to. So for TradingView, I'll go ahead and log out here. Let me go here and log out. They have a list of brokerages that you can use. So you'll need to make an account, with one of these brokerages if you decide you want to try using TradingView as your third-party platform. Once you do, all you do is hit connect on whatever brokerage you choose, hit continue. It takes you to this little page. You type in your username and password, hit sign in, hit allow, and just like that, you are connected. So that is how simple it is to connect a brokerage to a third-party platform, and it's like that for pretty much any third-party platform you use. And also, the way that we're going to be placing orders is going to be universal practically. It will differ slightly between the three most popular third-party platforms, but it's going to be universally the same. And we're going to start that process right now with me showing you after you've created your account, connected to a third-party platform, how do you place your first trade? Let's talk about that right now. So the first type of order I'm going to teach you for your first Forex trade is going to be the market order. And we're going to be talking about a buy market order to keep things simple. We'll go over a sell market order in just a second. But a market order is an order that will put you into a market a specific currency pair, it'll put you in at the exact price when you click the button, plus or minus the spread of that specific currency pair. So, as a very simple example, if, for instance, the New Zealand yen right now was at 70.50, and this right here you see on our screen is the spread. Right now we have about a 2 pip spread on the New Zealand yen, and the spread, let's call it S, was 2 pips spread. Then when we click the buy button, immediately we would get in at the actual price of the New Zealand yen plus the 2 pip spread. So it would put us in at 70.52. That is a market order to buy at market. And what we're going to do is go ahead and do that right now. We have a 2 pip spread. Price is currently near 70.48. So we should be filled somewhere around 70.50. Let's click buy, 10,000 units, click the buy button. And there we are, filled at 70.49. We got a little better fill, but it's going to be the exact price when you press the button, plus or minus the spread, depending on if you're buying or selling. If you're buying, it's the price the market's at, plus the spread in the amount of pips the spread is. If you're selling, let's go over that right now. So a buy order is the exact price you press a button, plus the amount of pips the spread is. All right. My job's done. I've taught you how to place your first trade. It's over, right? No, I'm just kidding. All right, let's go ahead and dive into a sell order now. Let's close out this trade. And in terms of a sell order, what you'll do in this case is the exact opposite. A sell order, let's say, using our example again, that the current price of the New Zealand yen, let's say, was 70.50, and we had a 2 pip spread. What you would do with a sell market order is be telling your brokerage, I want in at exactly 70.50, if that's what the New Zealand yen is at right now, and you want in at the best price your broker can give you. Normally, the best price they can give you is whatever the actual price of your currency pair is, minus your 2 pip spread in terms of a sell trade. So in this case, you would not get it in at 70.50, you would get in at your market order at 70.48. So that's the way a market order works. It gets you in at the best possible price, which is the exact price that the market is at when you press the buy or sell button, plus or minus the spread, depending on if it's a buy or sell trade. So after you do that, is your job done? You're in the market. You're good to go, right? Well, that's not true. Most of the time, you want to have a specific designated place where you know you're wrong, where you get out of the market for what's called a stop loss, and a designated place where you want to take targets, which we call targets. So with that being the case, what you would need to do, let's just use this hypothetical situation we have on our screen. Let's say you see the New Zealand yen is in an uptrend, and we've been testing this level of resistance, but you think we're going to see a breakout. Okay, so you might want to place a market order right here where price is now. So let's go ahead and do that. Let's buy the New Zealand yen. Market order done. So now, what were we just talking about? You don't want to just leave this running, right? How do you get out of this trade? When you think you're wrong, how do you get out for a minimal loss? And when you know you're right, the trade has worked out in your favor, how do you get out? Well, if you've bought the market, both of these orders are going to be sell orders. But what you need to understand is that if you have bought the market, you have to put a sell stop at the price you want to get out at if you are wrong. So if you use a buy order and you're in the market long, you have bought any specific currency pair, you need to put a sell stop order in order to get out of that market. If you are wrong, a sell stop order will get you out of a buy trade. If this trade starts to drop and goes against you, it will get you out at wherever your sell stop is most of the time, unless you get slipped, and a lot of things that we're not going to discuss in this video. But for the most part, that's what this order means. So in order to do that, you have to right click on your chart, or at least this is how I would do it, and put a sell stop right here. It says sell New Zealand yen stop 10K units at 70.101. So again, let's say you're making this trade and you want your stop loss below these lows, and that's about 70.10. Then you would do this and put your sell stop order at that 70.10. So now we have a stop loss order placed, And this is the hard way, guys. There's a very simple way to do this. I'm going to save that till the end. This is the hard way of doing it, but it is necessary to have stops and targets in place. Let's say after you enter this trade looking for a breakout, you see and notice we have a level of resistance over here, and you would like to get your targets off right before that level of resistance, because at that point you're worried the market might turn around. But you see that we have room to the upside. So what you would do in that case, let's say you wanted your target to be at 71.41. Would you place a sell stop trade at 71.41? No, remember, if we're in a buy trade, we don't want to sell stop trade up here. It wouldn't even, most brokerages won't even let you do that. But if you're in a buy trade, then your exit at a target higher than where price is going to be a sell limit. Your target, if in a buy trade, will always be a sell limit. Your stop, when in a buy trade, will always be a sell stop order. So in this case, we would go here, we would go to trade, and we would have a sell limit order for the New Zealand yen at our target. So at this point, we actually have it set up to where the market, even if we go to sleep at night, these orders, if our broker does the correct job, which isn't always guaranteed, but if it does, then these orders will be hit. If the market goes against us, we'll get out and we won't have to worry about our losses exceeding what we're comfortable losing on this trade. And if we head higher, we know that the market or the broker, these orders should take us out at around 71.41 for our take profit. So this is how you would set up a market order with stops and targets. And instead of waiting until the end of the video, I've decided I'm gonna go ahead and show you the easy way, the super easy way to do this right now. And don't worry, we're about to go over the sell orders as well, so I can teach you that. But let's go ahead and close this order and talk about the easiest way to do this, and one of the main reasons I absolutely love the TradingView platform. And I'm not associated with TradingView whatsoever. I don't have an affiliate account with them. I make nothing if you use TradingView. It's just my favorite trading platform overall. So what's the easy way? Let's say we have this same trade set up. We have this breakout pattern on the New Zealand yen. We have our same stops and targets. All we'd have to do is click create the trade, create a new order. We have our market order. We have our 10,000 units. Now on TradingView, all I have to do is click my take profit and stop loss, and I can put in my take profit price of, remember, the stop loss price. The stop loss price is 70.10. So I can go to stop loss, go to 70.10. I can go to take profit at 71.41, which would be right here. And all I have to do at this point is click buy and watch. These orders are set automatically for me. This is the easy way to set up your market order with a stop and target already in place. So you have to do nothing else now except for wait on this trade to either work out or hit your stop loss. That's how to place a market order. For those of you who are beginners, I hope that really helped out in terms of how to place your first Forex trade. Remember, you always want to have a stop loss in place to minimize risk, and you always want to have a place that you at least have an idea of where you want your targets off at, and this is how you would set up orders for that. Now, let's flip the script and go to a short example of the market order. It won't take nearly as long because you already know all of these little nuances. So, an example of a short trade, let's say you have the opposite opinion here on the New Zealand yen, and you want to go short at this triple top. You say you want your stop loss above these wicks, and you want your target to be somewhere around this level of structure because it's been tested multiple times by this market. If that was the case, what you would do, simply put, is you could do the old way, right? You could hit sell right here and then put what would you put right here? Would it be a buy limit or a buy stop? Anytime you're selling the market, remember both of these orders are going to be buy orders, because if we're selling the market here and we want a stop loss and a target, we need to get out of that sell by buying those units back. So if we sold right here and we expected the market to push down and we got to right here, would this need to be a buy limit or a buy stop? Well, if we're selling and the market's going towards our profit, this is going to be a buy limit order. If we're selling and the market comes up to our stop, pretty self-explanatory, it's going to be a buy stop order. So we could do it the old-fashioned way, the really difficult way, which is just press the button. Let's sell it. Okay, it's sold, and then come through here, have to right click. We want to do a buy stop right here, and we click buy. And then we want to do a buy limit right here, and we click buy. And that's the old fashioned way. Or instead of making it complicated and having to close all these orders manually, which is a biatch sometimes, you can just right click on the trading view chart, hit trade, create new order, make it a sell market order, put in your take profit and your stop loss, and your orders will automatically be set. So that, my friends, my family, is how to place your first Forex trade if you're looking to trade market orders. Now, let's dive into limit orders and then stop orders. And we're going to go through the same thing. I'm going to show you exactly how you would use a limit order and a stop order in order to trade. Let's do that right now. See you there. All right, limit orders. So first off, we're going to start in the same way we did with market orders, and we're going to talk about buy limit orders, right? Okay, so for a buy limit order, what you are going to be telling your broker with a buy limit order is that you want to enter the market at a price below where the current price is. There are two types of limit orders. You can have a buy limit order or a sell limit order. A buy limit order is when you tell your broker you want to be put in at a price below where current price is. For example, I will use a blue line for a buy limit order. If I wanted to, let's say, enter the market right here at these previous support levels, because for some reason I believed that this market was going to head higher if it hit this support level, then what I would need to do is put in a buy limit at 69.96 here on the New Zealand yen. So that's exactly what a buy limit order does. And how do you set that up? Well, it's the same exact way that you would set up a market order by right clicking on the chart in most trading platforms. So the way you would do that is just, let me get rid of this real quick. You would right click on the chart where you wanted to trade from, and you can just put in buy limit, right? This is the easy way, the old fashioned way. But let's remember, we want to do things the smart way. And if we want to have a stop and a target, we definitely want to have those set before we're triggered into the trade. So we can actually do that here on TradingView. Let's get our long position tool out. Say you want to enter the market if it gets back down to that area of support. You want a stop loss below that area of support, and you want a target set back up at the previous resistance levels, okay? If that was the case, you would right click on the chart, click create new order. What you want to create is a buy order, but right here you can see that we have different options: the market, the limit, and the stop option. So what I would do is click limit. We want to buy limit at this exact price of 69.98, and it has that right here. We're good to go. So what we do is, let's say we're doing the same 10,000 units, we can set up our stop and target price automatically here through TradingView, which isn't allowed on some other platforms. Some platforms make sure that you're entered into the trade, or they require you to already be in the trade before you can set your stops and targets on limit orders. And I don't like ever having to wait to enter a trade. I'd rather just set this trade up and be able to forget about it until it either fills or I have to cancel the order. So what you would do here in this case would just be the same exact thing as a market order. You would go with your stop price at 69.74. You would go with your target price at 70.54, and you would have your trade set up. You'd click buy, and there you go. Your entire trade is set up for you automatically. This would be the way I would place buy limit orders. We're going to go through sell limit and the stop orders a little more quickly, because you already know all the nuances about TradingView and about whatever platform you're using. This is normally universal. They should have something like this. And just to break off for a second, if your platform does not offer an automatic way like this of doing limit orders, stop orders, and market orders with automatic stops and targets, I would suggest finding a new platform that does. This makes trading so much easier for me. It's been something that's really helped me knock out orders extremely quickly to get on with my day, or to get on with trading a different currency, or whatever it may be. So that's the buy limit. Now let's talk about a sell limit. First off, what is a sell limit? Well, if a buy limit is telling your brokerage you want to buy below price, then what do you think a sell limit is? A sell limit is going to be you telling your brokerage you want to sell above price. So what you're saying essentially with a sell limit order is, if the market comes up to a certain price above where price currently is, current price, above current price, then I want you to trigger me into that trade because I believe that the market's going to fall. And if that's the case, let's go ahead and set up a trade like we just did with a short tool. Let's say you're a trader that believes this resistance level will act as resistance, but you don't think you're going to be around your computer. You have another obligation. So you don't want to miss the trade, but you can't be there for the trade. So you decide, I want to set up a way of getting triggered into this trade automatically without having to sit at my computer. The way to do that is a sell limit order. And what we would do is have that sell limit order. Let's set up the whole trade. Say you want to sell there. You want your stop loss to be above these previous levels of resistance here. So let's come down a bit. And you want your target back off at this triple top right here. That would be the trade setup, right? Because you're using a sell limit, which means you want to get in above where current price is. Using your sell limit, your stop is above previous resistance, your target's back down at this level. So if that was the case, you would just right click on the chart, go to trade, create a new order. Your sell limit order would be at 71.38. So we would change this to 38. And then you could plug in your stop and target in the same way we did on the buy limit order, and your trade would be set up automatically for a sell limit trade. And that's how you would use sell limit and buy limit orders. Remember, a buy limit is buying a market below its current price. A sell limit is selling a market above its current price. And this is how you would set that up through TradingView. These principles are universal. It'll normally be extremely similar in any other platform that you're using. Okay, so that was limit orders. Now what we're gonna do is go through stop orders really quickly, and I'll be right back for that. Let's take a look. Okay, so what is a stop order? And we're gonna do this in the same exact way. We've done both of those. We're gonna start with a buy stop order. There is a buy stop order and a sell stop order. And the easiest way to think about these is a stop order is going to be the opposite of a limit order. So if I wanted to, let's say, buy the New Zealand yen above these highs, what I'm thinking, let's say this is my mindset as a trader. I'm thinking that if the market pushes above these highs, that we could really see this big breakout up to this resistance, and that trade would look something like this. Just to speed this up a bit, we want to buy above, we want that stop loss right below those little levels of support, and we want our target at resistance back here. If that was the case, and that's the trade I wanted to place, the way I would place that, if I wasn't going to be around the computer, but I knew I wanted my broker to fill me automatically if we got up above these highs. If that was my mindset, then the way I would need to place that order is with something called a buy stop order. A buy stop order is you telling your broker you want in above current price. You want to buy the market above current price with a buy stop. The way we would set that up, come through here, create a new order, go to a stop, a buy stop, make sure it is the correct price that you are trading at, and you would set it up the same exact way we've just set up limit orders. You could put your stop loss price and your target price, and it will set the order up automatically. Again, if your platform does not do this, I highly recommend and suggest finding a platform that does do this for you, because it makes things much more simple and very quickly. What if you wanted to do a sell stop trade? And let's say your sell stop was practically the opposite of what you just took as a buy stop. You were thinking, if this market breaks below these little support levels, I think we're really going to start heading lower. And if we do, I'd like my stop loss to be above our previous level of resistance and my target to be down here at this little leg of support, just for an example. If that was the case, the way you would enter this trade is with a sell stop. A sell stop tells your broker that you want to sell the market below current price. That is a sell stop order. You would enter that trade in the same exact way with a sell stop order, and you could plug in your stops and your targets, and that's how you would use the stop orders that your broker offers. And that's how you would use every order that your broker offers. I hope you now understand how to place your first Forex trade. If you enjoyed this training and you are ready for some more advanced material, we do have a few spaces available in our more advanced VIP training program called the EAP training program. If you're interested in that, the link is in the top of the description. I'll post some testimonials of some students that just graduated on your screen right now. In this program, you're going to get a full training course that will teach you step by step how to go from wherever you are to becoming consistent, to becoming disciplined, and the way that I personally became profitable as a trader. I'll take you step by step through that. You'll also receive 2 to 5, depending on the weeks. The market reacts differently some weeks. You'll receive 2 to 5 email alerts per week. These alerts are not signals, but rather a chance for you to see the strategies and techniques you're learning in the course in action. I'll be showing you exactly how I'm using them in order to trade in real markets. I also have a review video that I do every couple of weeks to show you me going in and out of drawdown. What this will do is help you with your discipline. You'll see me during losing weeks. I have them, trust me. You'll see me during really good winning weeks. You'll see me during break-even weeks, and that will do wonders for your trading psychology. Along with that, you'll have priority email where you can get in touch with me personally every day that you need help, and I will respond to you very quickly with whatever I can help you with, whether that be something just Forex related or something related to the course. So if that sounds interesting to you, that is the first link in the description labeled EAP training program. If not, that's totally fine too. Make sure you have it locked here. We produce content like this each and every week here at the Trading Channel. I want to say thank you. I'm grateful to have you a part of this team and this family. I hope you have a great rest of your trading week. Hope you have a great weekend. This one's coming up, and I will talk to you in the next video. See you guys soon.